Welcome to the latest Motley Fool Scoreboard. I'm Anand Chokkavelu, and we've got longtime fools Karl Thiel and Keith Speights giving a 1 to 10 rating to gene editing biotech Editas Medicine, ticker symbol EDIT. First, we'll rate the strength of Editas's business, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. 3's from both of you, Karl.
Yeah, this is a hard one. And honestly, I thought about giving them a 1, but I'm giving them some credit for their patent estate, which is, there were a lot of patent battles sort of early on in the gene editing, the CRISPR commercialization days, and they've, court tested out some decent patents, and that is actually saving them a little bit. I mean, they have license deals with companies like Vertex and Immatics that do bring them some revenue and should continue to do that out into the 2030s. It's not a lot. Unfortunately, the whole gene editing, gene therapy space is depressed enough right now that I don't think there's a lot of growth opportunity to that, but it's a very, very small silver lining to what unfortunately has been kind of a disaster.
Yeah, I totally agree with Karl on this. Editas does not have any approved therapies. Right now, it doesn't even have any programs in clinical development. Several years ago, I owned a tiny position in this stock when it did have a clinical stage candidate that was targeting a genetic eye disease. But when it appeared that program wasn't going anywhere, I sold all my shares. I'm glad I did. The only reason I didn't give the company a lower score is, just as Karl said, it does have some potentially promising CRISPR gene editing technology.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Both of you were a little lower than those 3s at 2s, Karl.
Yeah, and I mean, I do feel a little bit bad about this, and I feel a little bad for Gilmore O'Neill, who's the current CEO of the company. He inherited a lot of problems, and on top of that, he came into the company in mid-2022, which is like the worst time to take over a biotech. So your numbers are going to, virtually all biotechs have been crushed since then. So, you're already looking bad just by existing. And he was part of a successful team over at Sarepta. But, he's just the latest in a revolving bunch of CEOs at the company. He hasn't been able to work any wonders. What they have going for them now is they still have an existing partnership with Bristol Myers Squibb on doing sort of allogenic CAR T. But that's been an area that's been tough for other gene editing companies. So, you want to view that skeptically, if hopefully. Let's hope their focus will continue to work for them.
If I counted correctly, Karl mentioned a kind of a revolving door at the CEO level. I think Editas has had 4 CEOs since 2019. The game of musical chairs in its executive ranks is still going on. The company's CFO left in March to pursue another opportunity. We hear that all the time, right? But the stock has plunged 90% since the current CEO, Gilmore O'Neill, took the helm in June 2022. Karl was right. That was a horrible time to come on board, but still the stock has performed abysmally. There's more Homer Simpson than Warren Buffett, in my view, with the management, unfortunately. So I think a score of 2 is appropriate.
For financials, a 10 is a fortress, a 1 is yikes. Both of you have 3s on this one, Karl.
Yeah, so they have roughly 2 years of cash remaining, and when you're looking at this as a sort of a survival story here, that could be enough to get them to better times when maybe the market will look at companies in this position a little more kindly. That's a pretty big if. Realistically, if you look at their strategy, what they're going to do over the next 2 years, hopefully get something into the clinic and maybe amass enough early data that they could raise some cash on it. But they're very unlikely to be doing that from a position of strength. So best you can say is they have some time.
We're fairly close to a yikes here. I like Karl. I give Editas Financials a 3. The company's losing money hand over fist. Its net loss in the latest quarter was nearly twice what it was in the prior year period. So things aren't going in the right direction. The only revenue it makes is from those collaborations, but that's not a huge sum. The one relatively bright spot is the company's cash position of around $270 million. But, this amount won't last very long. I think Editas is looking that it'll fund things through the second quarter of 2027. So maybe that'll give them enough time, as Karl says. We'll just have to wait and see.
Keith, let's move on to valuation. How well will Editas' stock do over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
Yeah, because Editas doesn't have any clinical programs at all at this point, all I can do is guess what kind of return it's going to deliver over the next 5 years. Honestly, it could just as easily be less than 0% as it could be over 15%. I mean, the possible returns are all over the map. I'll go with 5% to 10%, assuming the company advances a program into clinical testing, attracts some positive interest from investors, but the safety score has to be really low. I'm going to say a 2.
Yeah, I mean, I totally agree with Keith. It's impossible to know where this is going to go. Editas has an $81 million market cap. They've got $270 million in cash. So it's trading less than a third of the cash it has in the bank. Enterprise value of negative $153 million. So that basically means the company could liquidate today and be a triple for investors just by returning the cash. And maybe that's what they should do. So what I'm thinking is it could be acquired for its patents, and that could be a meaningful gain. It could also just continue to burn cash. That's typically what biotechs do, honestly. If I'm forced to guess, I'll say it'll be 15% plus on the basis of some kind of buyout. But I mean, I will give it a safety score of 1.
It's time for everyone's favorite topic. Keith, is there a company in Editas' space that you like better?
This is not going to be a shocking answer. Yes. So after all the scores we've given Editas, yes. I do think there are a few gene editing stocks that are definitely better than Editas. Intellia Therapeutics, ticker there's NTLA, especially stands out to me. It has a couple of promising late-stage programs. Intellia also has a big partnership with Regeneron.
Yeah, and if I was sticking purely in the gene editing space, I'm right there with Keith. I would also pick Intellia as being kind of my favorite in the area and one I would prefer, certainly. Just broadening out very slightly into gene therapy, I actually will pick a company that has bucked the trends and actually managed to have a very commercially successful product, and that is Crystal Biotech, which has a redosable gene therapy, and that gets around a lot of the problems, ironically, with gene therapy that gene therapies run into because it's a one and done treatment, and markets don't seem to know how to deal with that. So I really like Crystal Biotech, both for its current therapy it has for a very rare skin disorder, and also it has a number of aesthetics programs.
Thanks to both Karl and to Keith. They've given Editas a very low score of 3.4 out of 10. That's bad news for my portfolio. I own a little Editas, but I bought a basket. I also own Intellia, so there's that. They're saying that there is upside potential possibly, but lots and lots of risk. And as Karl said, you're kind of hoping for a buyout there, which is never an amazing strategy. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Garden Health. Till then, Fool on. Yeah, just, hey, they got nothing. Usually you could be like, well, they've got a couple, stage 1, right. Phase 1, they got a 2 that has something.
Yeah.
That's pretty bad.